All right, yo, grab that coffee. We'll start in like 2 minutes, maybe less. Yo. Oh. It's weird because the stream's telling me there's 45 people here. But then the actual participant list is significantly less, so I don't know which one's right. But anyways, good morning. I was just thinking, people always ask me, Wayne, how much money does it cost to become a Forex trader? And I was just thinking about it as I was making coffee. I'm like, well, you need $1,000 screen to protect your eyes. You need $1,000 chair to protect your back. And you need $1,000 coffee maker to protect your soul. Right? Technical, fundamental, and psychological. It's the trifecta. Cool. Anyways, happy day. Good to be alive. Oh my God, did you see ADP? He can cut a record from side to side with the ride that glides. Hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of your future. Your past performance is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, guten Morgen. How are you? Very cool. Today is the first day of my last day at Harvard, so tonight I'm doing a 2-hour final exam, and then tomorrow night I'm doing a 3-hour final exam, and then it's over. Just what did the good doctor say? Dr. Dre? You guys know Dr. Dre? Big fans of Dr. Dre? Just one more platinum plaque, then fuck rap, you can have it back. That's like, I just kind of like that. Ooh, sorry. I said a no word. So anyways, good morning. I'm a currency trader. I'm still in love with currency trading. I've been studying alternative investments, if that's what you want, that's what my master's degree is about all different types of alternative investing. And Forex is still the best, bro. By far. By far, this is the best thing you should be in. So, very cool. I'm excited to report that. There's the sum of 5 years of hard work. What we do here is the best opportunity you have. So, very cool. Ask questions, get involved. We can do technical analysis, fundamental analysis. I can do sort of the back office business of Forex trading, if you will. Maybe the upstairs office, the front office of Forex trading. Just ask questions. I'm happy to help any particular way I can. The description below the video, there's tons of resources. So, I've been doing webinars since webinars were a brand new thing. So about 15 years. YouTube's only like 12 years old. I've been doing videos on YouTube for 12 years, right? So over the course of meeting so many traders over all these years, some people say, Wayne, write a book. So I wrote a book, and then like do some videos. So I did a video training course, and then do some live trading. We have live trading. Then help me find a broker. There's a broker, and do this and do that. And so, right, Wayne, can I have your chart templates? All these things have been made available because you asked for them, and all those links are in the description below. In particular, this community, Forex.Today, this community of 15,000 Forex traders stationed around the world. We get together to help each other. This is a valuable community, and Traders Way supports this valuable community. So you are not alone every single day. You have someone to go to and ask questions. Maybe I can look at a chart and see how similar or dissimilar it is to your own thought process. Maybe I can confirm or deny your analysis. But either way, you got someone to lean on, whether it's me or someone else in this community. It's very, very supportive. And Traders Way likes that. They like the community, and in particular, they want educated traders that have skills to continue trading, not just for a few days or a few weeks and blow up a trading account, but a trader that actually has the skills to trade day after day, week after week, month after month, year after year, because, you know, it's not just, it's a symbiotic relationship, right? It's a symbiotic relationship. Every time you pull the trigger, they provide a service and they get some compensation for that. So it would be great if you could be successful and trade for years and slowly grow your account size and slowly grow your lot size. I mean, it makes sense. So these webinars don't cost you money, but they do have a cost, and that's visiting Traders Way and showing them some loyalty and respect for helping you in the beginning when you need the help. And then all they're asking for is the opportunity to earn your respect and maybe even your business. So, tradersway.com. Thank you, tradersway.com. Let's go to the main screen. And I thought I'd do something different today, and because I noticed there's this participant list thing, so I popped it out, and it says there's like 10 people here, but I can tell you there's significantly more than 10 people, so I don't know what this participant list is. Because there's triple digits, not double digits worth of people. So I don't know what this list is. It's kind of weird. But anyways, to all 10 of you, welcome. And then I just realized because I popped this open, it got rid of the chat, which is kind of weird. So I think I'm going to have to get rid of that. So it doesn't work and it's not helpful. So I'm going to, this is what I look at, by the way. Isn't that nice? Oh, can you see this? I don't think you can. No, I don't think you can see this crowd in front of that white building. And anyways, I thought I'd tell you a secret about Harvard. But I'll cover that up. All right. No secret for you. Okay, let me pop open this drawing tool. Yeah, maybe it's the ones that are commenting. Yeah. So I don't know why you'd call that the general participant list. I guess they're actually participating versus viewing. I don't know. All right, so here's where we left off. This is the nat gas. Did you guys enjoy the conversation yesterday on knowing exactly when to pull the trigger? Whoever wanted to dump nat gas yesterday, I saved them money. You're welcome. Okay. Oh, Gee. I got your email yesterday. I'm sorry. I'm in the middle of finals. Anyways, I got a complicated life. I've had no time. I won't have time. See, like today I have to study and then take the exam. Tomorrow I have to study, take the exam. And then instead of popping to court and celebrating, staying up all night and playing Far Cry 5 and finishing it for the 19th time, instead, I got to go to bed early, wake up and do non-farm payrolls. Right? So like just no rest. So I'm sorry, but I'll get you taken care of. But yes, it's every day. I don't know why you can't get in. Usually just click the button and you're in. So I don't know what's going on, but I apologize. I'll take care of you though, okay? Sorry. I'm almost there, man. I'm almost there. Cool. All right. So anyways, whoever wanted to sell this yesterday, I was very, 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 very specific and detailed on how to put this together. And in particular, not just like, oh, wait for the rollover, but more specific, like how the math works on this particular algorithm, which we call the stochastic oscillator, and what it means and how you'd use it properly in this situation versus other situations. And if they took heed, they survived. Okay, well, Guy, yeah, there's a section called the live trading group, and then you click on it on the thing that says live trading room, and then there's a button and it puts you in. Okay, so I'll have to double check your account and see if something went wrong somewhere, but that it should be easy. So. But you know, people have problems. So maybe there's just a small thing. Like some of the other days, like, I can't log in. I can't log in. I've sent you 75 emails and I can't log in. Help me, help me, help me. And I'm like, send me a screenshot. And they're trying to log in on the page in which you register your account. And it says, register your account credentials here. What do you want your username to be? What do you want your password in? And they're trying to log into that form. And they're like, it doesn't work. It doesn't work. I'm like, oh my God, you're logging in on the sign up form. No, you click on the login button. And so, you know, I don't think that's it, but you know, this is what happens. So hopefully you're clicking in the right place. And I think you've been around, Guy. You're a smart guy, Guy, so I know you got this. All right, so let's take a look at this. Big recovery off the 21. Huh? Right? Yeah. You know what it is probably, Guy? Maybe you've signed up twice, one with an email, and the second time with a different email, and it's struggling to figure out which one you in. So the one you're logging in is your wrong account, and the one associated with your swing trading group is the other account. Sometimes it's crazy stuff like that. And you're like, oh, well, I signed up to, you know. So anyways, we'll figure it out, man. Just not this week. Maybe Friday afternoon. Hit me up after NFP. Before I open up the bottles. All right. Actually, which means, see, I haven't even had time to think of myself. I need to go buy some Dom Perignon. Because that would make sense, right? Like, Thursday night, I'm done. I should have some Dom Perignon chilled. Oh my God. I don't have time. So, this is our BTC. I don't know why we've lost our... let's change this. Let's do Confluence. There should be a... No, there isn't one there. I was just wondering why our watermark wasn't working. Yeah. Oh, you had access to the live group last week. Can you get into the room? Like, are you in the one that says like join live webinar or whatever, and you click the big orange button right next to it, shows all the times, and you click it and it says something like someone's in the other room, the moderator's in the other room. Is it like that? Anyways, so oh, I just noticed you guys are asking the same thing. Where's the watermark? Why isn't there a watermark? So anyways, this is just farting around. You haven't had an opportunity to buy this since last Thursday, and it's Wednesday, so it's been about a week. So I really don't know how you feel about this. Oh, okay. See, that's different. Um, I updated the code. It might have even been yesterday based on an email I got from Ryan, but so that should work, but unless there's another. And again, I haven't read my emails. I've had my phone off. Um, anyways. Oh, all right. So there's no point at being a bear in this situation. If you're going to be a bear, let it make the first move. So I think the only thing that can be thought about in the moment is something like this. And this is all the way next week. So this incorporates today, tomorrow, Friday, Monday. And maybe it does one of these things like a Thursday and up. But my point here is even if you want to be a bear, there's no good reason to even be thinking about it right now. Okay? Okay? That's all. You got to know when to hold them, know when to fold them, walk away, and run. This is walk away. Not quite right. Right? Oh, right on, fortunate. I ain't no fortunate boy, no, no. It ain't me. It ain't me. I ain't no millionaire son, no, no. So yeah, awesome, fortunate. Awesome. Cool. Right on, fortunate. I love good news and happiness. Awesome. All right, let me get back into this. I feel myself fading already. Oh, already my. Anyways, let me stay focused here. I'm struggling to keep attention. All right. It ain't me. It ain't me. So we're not quite there yet, but you might agree with me and say that could be resistance. Okay. If you were a bear, you'd be thinking that could be resistance. Now, if you're a bull, you're like, no, we're going to get through that, but you should still pay attention and give it respect, I guess is what I'm saying. Okay. So, resistance is, this in this case, if you're a bull, you'd be really focused on like moving your stop just in case it holds, or maybe taking profit there and then you can jump back in later on if it breaks. But the thing is, that is pretty clearly resistance, and it should be important to both bulls and bears. Now, the bears are going to look for bulls to wimp out. So if you wimp out, you're kind of helping their cause a little bit. But if there's weakness, you'll see it roll over. Okay? And maybe this is your double top of a double top, which is a theme we've been talking about recently, right? So pay attention. Okay? Pay attention. It's really interesting because next week you will see this 200 EMA touching this little candle. And this is kind of the problem if you don't document what you're doing. Next week you can look at it and say, oh man, that's so obvious. It kicked off the 200 EMA. Why didn't I buy it? Because it wasn't touching the 200 EMA then, right? Right? So, yeah. So I would pay very close attention right now. The reason I brought that up, and let me move this this drawing tool over here so I can use it. What do these moving averages mean if you're using moving average? Okay, you're bullish and aggressive, bullish and aggressive, bullish and aggressive, bullish and bullish, 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 bullish. Oh, okay. Once you breach the 21, typically like this, says you're getting closer and closer to a top. Then when you see the 55 is in control, really in this scenario, you're thinking, you're typically thinking either double top or lower high, lower low. Okay. But the breach on this time frame of the 55 is a big clue. It's a big clue. It's a big flag. It's something that you should really pay attention to. Okay? This is telling you that a significant amount of bulls got out of this. Now, again, I think that's last week, isn't it? So out of the like pound yen was an exit, I think, around that point as well. So there was definitely stuff going on. Okay, so this is showing that even though this was very, very bullish, this is not. So maybe you treat it like a range is another way of looking at it and say maybe you're neutral on this for now. If it breaks higher, you become a bull. But until it does, you're going to look, maybe not trade it, but you're going to look at it like a range. Okay, so if bulls take over or have taken over, you will get a breakout, pullback, long and gone, and everything will be golden. And of course, if they're not buying here, this is the opportunity for bears to really get involved, because the way I look at it is this part is mostly profit taking, and true bears are just going to be entering in this process here. And we call that, you would measure this maybe, right? Or you could use a standard deviation or stuff like that. So we're not quite there yet, but this is the key turning point, if you will. We don't know what's going to happen there, but what happens there is quite meaningful. And could the pound come all the way back down after an awesome July? Of course it can. Okay, of course it can. Time frame change. Can you see? So if this turns up here on the 4-hour, then this blue moving average, the 55, is going to move up and to the right. So next week it'll look like this. Okay? And that predicts the double top, as I explained on the different time frame. You got me? So if that occurs, the potential or the probability of a full bore reversal back down to the 200 occurs. The potential has increased significantly. The probability has increased significantly. So a good way of saying it is pay attention. This matters. There's a lot of clues that say down is way more likely than it was 2 weeks ago. Okay? So again, 2 weeks ago, I was doing this with you. Up, 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 down, down, buy. 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 Up, 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 down, down, buy. Up, up. Oh, crap! Okay? But check that out. That's 2 weeks of trading. 2 weeks. All you had to do is look for the down, down. Okay. So now this likely or potentially will change all of that. Okay. And you start something new in that case, and it would look more like this. And you would measure it using different tools than like you would look at it like this now. Okay. Now, if this was super long term, like let's say this was going to fall for the rest of the year, and I'm not saying that, but let's say that's our destiny, you you would likely, because that would have to occur on a very long term, you would get another double top, like let's say in September, and you'd get a double top of a double top of a double top of a double top. So this double topped, and then this double topped. And what I'm saying is this could be the left shoulder. Then we have this big downward move in August, and then maybe an upward move in early September, and then a bigger one down again in October and November, all the way into the election. And it would be a double top of a double top of a double top, because I can't even draw it for you. It's too far right. Could that happen? Oh, for sure. Oh, for sure, eh? But, right? But we're not predicting that. But you can be open-minded to it, okay? That's how important this drop could be. It changes the fate. And you're like, Wayne, you can't change fate. I disagree with you. You can change the fabric of the universe using nothing but your mind. Cool. So here's the double top of a double top of a double top. So we'll see what happens in here. This is very interesting. Let's move this out to a different time frame. It ain't me, it ain't me. Okay. Very interesting. It's interesting because pound dollar down would mean Aussie yen down, and Aussie yen is trying. Okay. I think if the bears were going to sell this, they were supposed to do it here, as I've already drawn. So I think this is quite significant that there's one more hurrah. So let me say this from a different angle now. I want to be a bull on this. I want to be, but I have to see reality, not what I want. It's easy to have confirmation bias. It's difficult to see reality. So if it's going to do this, then that pound dollar is going up. Okay? Now, here's what's in the back of my mind, because now it's confusing, right? You're like, well, if Aussie yen goes up, pound dollar goes up. But if pound dollar goes down, Aussie yen goes down. So, like, how do I know which one? Well, only one of those two scenarios, really, except, and I'm going to add another layer of complication. I think between today and, let's say, November, by and large, we go nowhere, except up and down, let's say, 300 pip ranges. Your customer says, Wayne, I'm trying to get the last offer, but I don't know, like other people are joining, so I don't know what I don't know why you're having problems, your customer. But if just 3 people just said, hey man, I just joined, it was awesome. I don't know why it's stuck. Arctic Turtle, no, not in this case, because that would require a stretch out to a different, I mean, unless you see like a monthly up here or something, yeah, maybe, yeah. A fake out, I wouldn't even call it that. Here, one of the things we talked about, let's go all the way back to like May or something. One of the things we talked about was just an ever-tightening range, all right? I think we're going to get some more volatility in September. And by volatility, I really mean like an increase in average daily range, let's say. Interesting. I'll have to look at it, your customer. Undefined method. I would say use Google Chrome. Oh, yeah. So, like, Guy goes back many, many, many years, so he knows all my stories. Um, Let me try to throw down. Maybe we'll get lucky and have some sort of resemblance of an Arctic turtle. Okay, let me try to fit this story in. Let's say we anticipated, because it's August, that the market is going to stay inside. An inside market is one that stays below the S and R pivots. And these are monthly pivots that I'm highlighting. And because it's August, we say, okay, we're not going to be able to blow through the gates here. We're going to have an inside month. This is the language I use. Okay. So that's in the back of our mind. That's our strategy for August. And beyond or inside of that strategy, we have our weekly trade plan. So now I'm talking about, right? I'm talking about monthly and then weekly. And there needs to be congruency, obviously. You're doing the same thing, but on different time frames. So there's different expectations. And typically in that scenario, as you guys know, anyone in the live groups will know that this is obviously the buy zone. Clear as day. If you're a bull, that's as basic as it gets. And then typically this is your exit. So Guy is talking about an Arctic turtle. And let me try to explain that. Okay. Let's say your plan is here, but you also know the market wants to go here. And in some cases, what happens is the next couple of candles, in particular a really big one, will stretch out and hit this monthly target. So now you have weekly traders satisfied, but getting lucky and making extra pips on this explosive breakout move, right? So they're happy, but they already want to get out. These are free pips to them. They're like, oh my God, look at this massive breakout we got, let's say at the London Open or something, right? So they're super happy, but also super eager to get out. Meanwhile, the bigger time frame traders already know to get out here. So the weekly traders are being stretched. Now think of an Arctic turtle. The Arctic turtle is the slowest creature I could invent. It's a turtle living in the snow. Okay? And so the turtle's like, oh, I probably shouldn't reach out for that food. It's dangerous. I can be attacked. I'm vulnerable. But instead, he stretches his neck out, way out to grab that one last piece of food, and snap! Someone chops his head off. And it just goes like this. Boom, boom. Okay? It's stretching too far, reaching out to those last pips. I can almost get those other pips. And then, chop! That's that. Right? So everyone going through like the IMAP process knows that, where you get the significant stretch and an amateur says, oh my gosh, look at the size of the green candle. This must be bullish. But you know what we know is that's not bullish at all. Okay? That's actually bearish. So not only should you get out at that resistance, but you could counter trend trade it or scalp it, which is a form of stop hunting. So somewhere I've done a video on hunting stops, okay? And that would be a scenario in which I would hunt stops. And that's also the scenario where counter trend trades are born. What else did I want to say about that? It just slipped out of my mind. Well, I guess we'll just have to leave it at there. That's got to be good enough, right? Oh, May 18th video. Oh, well, of course. Thank you, FT9. Ah. Oh, is that right? Nice. FT9 is hot to go. That's awesome. Look at that. Yeah, I just watched that like 5 seconds ago. May 19th, May 18th. There you go. All right. So I need more mojo juice. So let's take literally a 1 minute break. Hang on, I gotta get my. Let's do a 1 minute break, and then we will continue. I will go through gold. I will go through oil. I will take requests. If you want me to do euro dollar or euro yen or euro Swissy, all that kind of stuff, I'm super happy to help. But I need coffee. I just don't sleep enough. So let me move over to that lovely intermission thing, and I'll be back in 1 minute. Have your questions ready. BRB. No New Year's Day to celebrate. No chocolate covered candies give away. But what it is. I just call to say I love you. I just call to say how much I do. And I mean it from the bottom of my heart. Of my heart. Of my heart. Make it a mac and daddy, make you wanna jump, 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 jump. Miggity, 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 mac daddy, make you wanna jump. All right, everybody still here? All right, let's get live. Cool. So anyways, there's your Arctic turtle. Cool. Bears on the Aussie yen need to get ready. Cause this ain't funny. My name's Mike D and I'm about to make money. Pulled out the jammy, named it at the sky. Yelled, stick 'em up. Let two fly. Yeah, this for bears is very significant. This is, like I said, on the Arctic turtle setup, that's where a bull is supposed to exit. That's a basic, boring, see it every week kind of swing trade. Okay? and that's where you exit. Straightforward, especially in August where you're actually happy to have an M2 to M4. You're not even thinking R2. You're like, oh my God, this went to M4. But here's the clue. It went to M4 in a similar kind of logic as the Arctic Turtle setup, where normally we'd be pretty conservative on this, but bigger traders wanted to get to the monthly. I think the congruency between the monthly and the weekly was important here. Okay? So if you are a bear, OMG, you need to start setting up trades not just for today or the rest of the week, but potentially the rest of the month. You might have follow-up trades that will last a couple of weeks, right? So the way you would mark this up on a chart as a bear is you're essentially looking for the lower high, right? Which would then sort of, based on some sort of congruency and, right? But that's what you'd be thinking. So let's try to look at this now from a bearish point of view. It's next week's sell zone. Yeah, I know, right? Right? I know, right? Don't turn your back on me. I won't be ignored, right? Right in there, Baba. Right in there, Baba. Baba Forex. I'm Brad Hall and I get respect. Your cash and your jewelry is what I expect. Yeah. So I'm just kind of, I can't think and talk at the same time. So once again, for reasons that don't exist now, we're at very interesting price levels. Okay. What's this? Are we getting spammed here? It looks like we're getting spammed again. Almost every day. It's amazing, huh? So yeah, so I'm just trying to think through this. It still feels like I'm still more conservative than I am aggressive. So I'm still kind of looking at this like, you know, which is ultra conservative. And I'm saying that because I'm not even expecting a top up here. Now, if it does, that'll be a whole different game and we'll have to look at it. But what'll happen is this will move up. Okay? Because we're still printing next week's pivots. Okay? We have a question here. How long will the S&P 500 continue up? It feels very erratic. Well, you have to think about it fundamentally. Okay? So everything in the S&P 500 is overbought. If you've ever been in a bubble before, it continues for a very long time. So I remember it got to the point in San Francisco where you'd show up to look at a house for sale. You'd be there the morning it opened. You would walk in, you'd look around, and you'll say, we'll take it, we'll pay cash, and we'll pay you 40% more than you're asking. If you didn't do that, you would lose the opportunity. And then you'd look at it, and 3 years later, it doubled in price. And you're like, oh, I can't pay $3 million for that doghouse. And all of a sudden, the doghouse is worth $6 million, and you wouldn't man up. And it gets crazier and crazier because Google money comes in, and they're like, $6 million, I'll pay you $10 million. All of a sudden, you're like, oh my God, 8 years ago, this was a nothing house. Okay? So you get in this scenario where it's overpriced, and because it's overpriced, it goes up, and therefore that attracts more and more dumb money. But the problem is, this is all manufactured by central banks, and that's not an evil thing. What'll happen is it will continue going up because there is nothing else to be doing with your money. Right now, your choice is invest into stocks or real estate would be the two most standard scenarios for most, like, let's say, wealth managers. Now, independent traders, they might add gold and Bitcoin to that. Okay, and then Forex, right? Forex, though, to me is more of the lubrication of the global machine. So money just responds to the flow of investment and spending. Okay. So we just see reality, right? The S&P 500 will continue going up until there is something better to invest in. You have to understand the logic. Okay. Now, if you don't mind, I could explain this through the lens of yield curve, which is the opposite of what's happening right now. So I'm going to need a drawing tool for this. Okay, so I'm going to explain yield curve in a normal market condition and try to explain why a bubble bursts and how to easily predict the stock market crash 6 months before it happens. Are you okay with that? Cool. So let me get set up here. You all know the loom. All right. So this is going to be yield. And this is going to be time. We'll say 1, 10, 30. I know it's not quite right, but you get the idea. And we'll call this 1, 3, 5, 7. All right. Okay. So we'll call this yield curve. Cool. Hey, Cave, if I'm off, like if this isn't what needs to be covered today, let me know. Okay. So this is yield curve. Now, typically, if you invest for 1 year, you won't earn a very large percentage, okay, because you're not facing very much risk. Not much is likely to happen over a year or even 3 months, which would pay even less. But let's say if you invested for 1 year, you would earn 1% in a normal market. And if you invested for 10 years in the bond market, you would earn a higher percent. Okay? This used to be, like when I first started trading, this used to be like 6. And then this was even more. And what will happen is, because the longer duration you buy in bonds, the more you earn, you get a yield curve that looks like this. So we'll call this a healthy yield curve. Okay? If you lend the government money for 30 years, you'll earn a high percentage. If you loan the government money for 10 years, you'll earn a medium level of return. And if you lend the government money just for 1 year, okay, you'll only earn this. And the reason for it has to do with risk. like things like inflation. Well, what if inflation skyrockets between now and 30 years? Well, then the coupon payments, if you want to call them that, that you're collecting are not going to be worth very much because basically your currency is devalued over that time, right? So you have to be compensated for risk is the other way of looking at it. The longer you invest, the more risk you're taking. The more risk you're taking, the more yield you should earn, your more return. Or another one, if depending on your background, right? So like if you're in finance, you might say, oh, well, this has to do with the time value of money. Yeah, all of these things. Okay. So you get compensated more for taking on more risk. I think we get that. Now that's a normal, healthy market. But then things change over time. Okay. So let's imagine we've gone from a healthy market, okay, to a bullish market. What does that mean for the economy? Okay, I'm not talking about the stock market now, I'm talking about the economy. More people have jobs. If you're an employer, it's harder to find a worker. There's less people available because everyone that wants a job has a job. So you get to the point where you have to go to the factory across the street or the shoe store across the street and start hiring those employees. And you have to say, hey, you're a great salesperson. Come work for me. I'll pay you more money. Okay. Now those people make more money and then they spend, and then the economy grows even more and more people get jobs. And there's all of a sudden we get things like scarcity, and all of a sudden it's hard to find a good home. It's hard to find whatever you're trying to buy, and those prices go up. And we call that inflation. And then the central bank comes along and says, okay, we have inflation now. The economy is getting hot. And we can see this in our PCE and our CPI. And what they do is they raise interest rates. Okay? And this directly impacts the bond market. Okay? Okay? And it tends to pivot where this doesn't change much and this changes very quickly. Okay? And now think of it from a business's point of view. If you're a shoe store owner, you need to borrow money from a bank on a regular basis. You have a rolling line of credit from a bank to buy inventory. It's absolutely, totally normal and needed. So let's say 4 times a year, you got to turn over your inventory. This is actually tracked in accounting. You have to look at inventory turnover, and the faster you turn over, the better it is, which means you're selling your supply very quickly and you need to buy new stuff, right? So the more you turn over your inventory, the better. But the problem is you collect this cash, you pay your employees, you pay your rent, you pay for marketing. So basically you get down to your net operating income, right? Your income minus all your expenses, and then you got your financing cost. You see what I mean? Now, if your profit margins, net operating income, let's say minus your expenses, let's call that profit margins, is 5%. Now you got to pay for your loans, which are normal, because every time it's not like you sell one pair of shoes and then you order a new pair of shoes and they get delivered by Amazon, right? No. You buy $3 million worth of shoes at a time. Store this inventory, and you dwindle down your inventory, and you want to totally sell all your inventory by the time you get to the new season. So you in winter you're ordering sandals, and in the summer you're ordering snow boots. All right, because there's this lag in time and delivery and all this kind of stuff. So you're constantly borrowing $2 or $3 million to buy inventory for the end of the year, but right now you're selling the stuff you bought 6 months ago, and you're constantly got this cash flow issue. Okay, constantly. And there's a cost to this. And the cost of borrowing money from a bank comes directly from the bond market. Okay, because this is where the prices are. And the Fed through open market operations influences, if not creates, the exact cost of the borrowing this money, the cost of money. Okay? So the Fed raises interest rates because the economy is overheated. There's a shortage of workers. There's a shortage of everything like housing and cars and food, and everything that has a price tag on it is going up. Gasoline is very, very expensive. Why? Everyone's got a job. Everyone's driving to work, all that kind of stuff. So this continues now, and your shoe store is booming. You got customers all over the place, but oops, you got to pay your employees a lot. And oops, your landlord raised rent. And then oops, your insurance costs more. And oops, all of a sudden, your net operating income, your revenue minus your expenses, well, guess what? Your revenue is the same. You have no problem selling shoes, but the problem is all the other expenses, even electricity is going up. Oh my gosh. So your profit margins are shrinking. Now, the loans from the bank ain't getting any cheaper either, right? And all of a sudden, this booming market suffering from inflation, the Fed comes in and does what? Raises interest rates again. Now, this is a problem. Why is this a problem? You're borrowing money 6 to 12 months in advance to buy all this inventory, to order from the factories, to have things delivered. Uh-oh. No, not hyperinflation. Don't think that way. This is just normal. This is normal business cycles. Okay, and this will help you think about the stock market, guys. This will help you think about the real estate market. This will help you think about trading money, whether you're risk on or risk off. This stuff matters. Okay? So here we are suddenly. We're in an economy where everything is on fire. Everyone is rich. Everyone is rich. Okay? The landscaper that mows your lawn is driving a Cadillac Escalade. Why? The interest-only payments. Okay? Everybody's rich. And that's a problem. So anyway, so the Fed raises interest rates again to counter inflation. But wait, now income minus net, right? Your net operating income. So your revenue minus your expenses. And now you got to pay for financing. And you had 5% profit margin, but now it costs you 5% to borrow money to buy your next inventory. So this hasn't hit the news yet, by the way. Everyone's rich. Keep buying the stock market. Everything's on fire. Everyone's getting rich. The party can never stop. This time it's different. So if the shoe company is publicly traded, now they come out and they're like, hey, we're selling shoes like crazy. However, we're not making any money. Sales are up. Same store sales are up. Inventory turnover is high. Everything we're doing is working. But we're not making any profit. Uh-oh. And some analysts say, oh, okay, well, that doesn't matter. Then another quarter goes by. Okay, I said 6 months in advance, right? So they come up and the first red flag is, hey, we're doing everything good here, but we're not making any profit. We're selling like crazy. We got lots of revenue. Everything is golden, except this one little problem. Due to the cost of borrowing money from a bank, which is sort of reflective of the overall economy, we actually don't make any money. So the stock market, the stock price comes down for a little bit, but there's always dumb money. You know, your chiropractor's dumb enough to buy that for, at this late in the cycle. Don't worry about it. He's rich. He's dumb. Anyways, so then another quarter goes by. Now what happens? So now we're 6 months into this, and the shoe store reports again. Yep, same store sales are up. Inventory turnover's high. Revenue has increased by 30%. But we still ain't making money. Now what happens? The company hasn't made a profit in 6 months. Stock market starts to fall. Then what happens? Not everyone's rich anymore. They're like, oh my God, my entire portfolio. I'm losing money. So they stop spending. So now people stop buying shoes. So you as a shoe store person now lay off a person and cut back on your advertising. Uh-oh. And now the guy that bought 5 apartments on interest-only loans loses tenants because they don't work at a shoe store anymore. They lost their job. Uh-oh. So now they're not filthy stinking rich. And by the way, they have interest-only loans, so they have no equity in their investment. And they got to pay high interest rates for this. Not 5, they're probably paying 7% in that scenario. Maybe 10%, but it's interest only. Oh, don't worry, the value of the property is going to go up. Dumb, dumb, dumb. That person gets scorched. They lose their property. The bank gets a default. The bank starts laying people off. The bank starts cutting loans. Oh my gourd. A vicious cycle. The first African American to win a Nobel Prize in economics wrote about the idea of a virtuous cycle and a vicious cycle. And this is an example of a vicious cycle now, where because someone lost their job, they can't buy shoes, so then the shoe store lays off an employee and cuts back on advertising. So now the advertising company loses someone, and the billboard people or whatever loses an employee, and then other people don't come in and whatever, and the banks lose money because they get defaults, and renters leave, and those go bankrupt, and all of a sudden everything comes down. And you get a scenario that we're in now, which often looks more like this. Okay? And it resets. If the government allows capitalism to work, it resets. And it usually happens because dumb money screws everything up. And the smart people, by the way, and I'm trying to make you smart money, sees all of this and says 6 months in advance, oh, here it comes. And they get out of the stock market. And remember, everyone's rich. Everyone's rich. So you start dumping your position 6 months in advance at all-time highs, and you have no problem selling your stock. Huh. But now you got to tie up your money for the next year while you prepare for the stock market to crash. So now you buy a bond that's paying 5%. You buy a U.S.-backed government security guaranteed by the Treasury, and you're going to collect 5%. 6 months from now, the stock market's going to be negative 33. You're out, basically in cash, earning 5% while all the dummies are losing 33. Meanwhile, the real estate market is crashing along with the real economy. Okay? So apartment buildings are suddenly half price. All your favorite stocks are suddenly 1/3 to 50% off. Oh, you want to buy Carnival Cruises for $6? Now's your time, bruh. When everyone else is holding their trades, watching it go down, 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 you already cashed out. Now you're flush with cash and you're like, MGM Grand for $8? Take it. Carnival Cruises for $6? Take it. I was looking at real estate investment trusts the other day. Some of these were down 33 to 50%. You could buy a portfolio of 2,000 commercial properties and pick them up for 50% off the net asset value back in March. Oh, that deal's long gone now. Why? The smart money took it and it happened fast. And all of a sudden, these guys are making money when everyone's losing. And then what happens? Everyone freaks out. They sell out. The stock market's way low. And then these guys come in and buy everything for half price. And this, by the way, is so important that if you miss the last 21, if you miss the best 21 trading days out of the last 50 years, you probably broke even in the stock market. Your financial advisor will not tell you about that one. If you didn't buy in March, the amount of profit you're going to have 10 years will be affected by that significantly. Okay? Neat, right? So anyways, I'm trying to get you to be the bigger, smarter money. There are times when you make money and then, right? And then there's times you have to cash out. And the more you know, the better you're able to make decisions before people even know there's a decision to be made. Okay? Cave said, so buy euro right now. Actually, you're weeks and weeks and weeks behind. I already gave all those speeches, right? Yeah, so An says, why did Ray Dalio lose 20% then? And you know the funny thing about it is for a year he said, I'm shorting the stock market, it can't go higher. I'm shorting the stock market, it can't go higher. I'm shorting the stock market, it can't go higher. And then the stock market falls and he loses money. I don't like Ray Dalio at all. Never met him, I'm not even interested. Yes, I think his process of analyzing markets and economics is spot on. But I also think he's a certified nutcase at this point. I think he's a billionaire that's trying to find his mommy's love. But whatever. Doesn't make the logic bad, but there's a great example, right? Telling everyone that the stock market's going to crash, you're always going to find people that are afraid. Oh my God, I'm going to lose 30 or 40% of my net worth again. It's an easy sell. It's an easy sell. Right? It's like selling an alarm for your house. Oh, well, yes, I guess it's a significant investment up front to wire your whole house. And yes, I guess paying a monthly fee to be connected to the call center is a big deal. I get it. But how would you feel if someone broke into your house in the middle of the night and raped your daughter and your wife in front of you? You're like, oh my God. Well, then if you don't want that to happen, pay me money. You're like, the scare tactic is the oldest trick in the book. But if he truly did what he was preaching to scare people, then how did he lose money if he was already short? I mean, it doesn't make any sense. And there's sort of the thing where you're like, come on, Ray Dalio. Come on, man. I would have actually been cheering for him to do very well, but to talk that kind of game, I would rather do what I just did for you and say, okay, don't worry about the likely scenario. Okay? Let's talk about how and why these scenarios occur, and they do occur. So let's talk about why, so that you can understand the process in which these crises take place to better protect yourself through true understanding and knowledge of the why, so that you can take care of yourself so you don't have to listen to a Ray Dalio or anybody else. There's a whole bunch of professionals that have built their whole career around the US dollar is worthless, the stock market is going to crash, gold is going to go to 19,000. There's all kinds of people that drum all that up. And the cool thing about the internet is you'll always find a large group that will raise you up and lift you up, and you'll be the center of that world, and then you get pegged into that world. What I would rather do is share the why and how it occurs so that you actually can take care of yourself and not listen to anybody. Okay? Veritas, the truth, the enlightenment of the Illuminati comes from the understanding of the truth, understanding how and why it works. It's knowledge. That's the idea of Illuminati. I don't watch people on TV anymore. I don't read the newspaper anymore. I don't do those types of things. I don't care about other people's opinions. I don't care what they do or how they get to the process, even Ray Dalio. But what I do care about is I stay in the game and I think and I analyze and I pay attention. And that's all I want you to do, is to know so that you can take in this knowledge to take care of yourself and your family and your loved ones. And more important than all of that's today. I'm also trying to teach you so you can take care of your legacy. If you can change your world now, let's say you make a bunch of money. Woohoo! I made a bunch of money. I mean, that's the whole thing on YouTube, right? Oh my God, you can make so much money so fast. Stupid, by the way. But you can make money. And over long periods of time, you'll make more and more money. But here's the real thing that'll happen to you. You will change where you are. You might even change who you are. You will definitely change the people around you. You may lose relationships as well as gain new ones. Okay? But the thing is, when you're successful, you will be able to move to a better neighborhood. You'll be able to have a nicer watch if you want, or a nicer car or whatever. But you will take your loved ones on with you on this journey, and you'll surround yourself with different people because you will be in a different physical space. You will be in a nicer, safer, more beautiful neighborhood with better schools and less crime and more interesting people. And all of a sudden, what you're doing isn't just acquiring a bigger house. You're providing a better start for your children. And because of that, they're influenced by, let's say, more interesting people. Their friends may be better off. I don't know. But then they go to a better school and they have better teachers and they get a better education. And they're taught from the beginning to find success through contributing back to society. So learn how to do something interesting and important for society. Go to Harvard, get a law school degree, get an engineering degree. Just keep growing and being on a different path. And what you may not realize today is that 300 years from now, your entire family name will be in a significantly better place because of what you're learning here today. You are changing your legacy. Your children's children will thank you. And I know this to be true. When I was in London, the richest guy in London died and gave it to his kid, a 20-year-old kid. And I thought, oh, well, that's interesting. The richest guy in London, billions and billions and billions and billions and billions of dollars left to this 20-year-old kid. So I'm like, where'd that money come from? His great grandfather, we're talking 300 or 400 years in the past, had very little money. Regular dude, a peasant, not royalty, not noble. But he bought some swamp on the outskirts of London, a place they call Mayfair. Swampy. Okay? So he bought the land cheap and built some sort of business. I will call it a hotel or something. and it earned some money. So he took some money from that and he bought another one. And then he bought another one. And he died and he gave it to his kids. And the kids have these properties. They took care of those properties, earned money, so suddenly they're young adults after daddy died, and they have income from 3 properties. So over the course of their lifetime, they bought 3 more and gave it to their children. So suddenly, now those children are born and they have stabilized properties and income. And you can go to a bank and borrow against them as banking got more sophisticated. And they're already wealthy now because their great-great-grandfather set all this up. Or I guess it's their grandfather, right? So now they're on their 3rd generation. They all know this property. They're better off. They live safer. They live a better life. They eat better food. They have access to healthcare, right? And then what do? They double that property because now they can go to a bank and say, well, we own all these properties and we want to leverage this up. They've been paid for 1 million years ago. Great. We have income. We don't owe any debt. Great. So now they double that. And then their kids double it again. And their kids double it again. And on that day, I created a 300-year plan for my family. I shit you not. Because I saw someone else do it. That guy 300 years ago had a plan to say, I want to go from a peasant and I want to then get to noble class, and then I want my child to live like a king or a queen. And it will only take me 300 years to achieve it, but it's only math. You start with a little bit of money now, and then over time, it does grow. You can't stop it. Even Einstein said the most powerful force in the universe is compound interest. So if you want your great-great-great-grandchild to drive a yellow Lamborghini, then you need to start now. Think way bigger than getting rich. It's so much more important than that. Because as soon as you have money, you realize, it's not what I thought it was going to be. Yeah, it's comfortable. You sleep in a nice bed. You have a nice chair. You got a nice TV. All your problems are pretty much the same. So you might as well just think bigger than that. Money? $1 million is going to change your life? Yeah, a little bit. So let's get you there, and then let's get you bigger. Bigger. I want you to have a 300-year legacy. That's what I want for you. That's my gift for you. Thank you for being part of Forex.Today. Thank you for being a client to Trader's Way. Thank you for being here. Please leave comments. Please click the like button. Tell YouTube this is quality content. And yeah. Am I a Mason? No. But anyways. But I'm a Libra. No, I'm not a Libra. Anyways, so peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Mama.